What is going on, guys? My name is Nevin Endy. I'm a broker and owner of a real estate company here in Las Vegas, Nevada. And the number one question, just as the nature of the business, is Nevin, I'm trying to buy a piece of real estate. How do I get started? Well, listen, I am here today to give you a step-by-step guide on purchasing your first real estate property. But before we begin, make sure to hit the like and subscribe right below this video. Do it, please. It helps my videos. It beats the algorithm. Let's beat the algorithm together. All right, so we're going to step one, right? And it's actually nothing related to real estate. The number one thing to get started is to boost your credit score. Get your credit score as high as you possibly can. Pay off some of the debts that are holding your credit score back, because according to a lot of lenders, the number one thing that they look at is credit score. But you may be thinking, oh, Nevin, I have a great job. I make so much money. That shouldn't matter, right? Wrong. The number one big thing is this. If you don't even have, from most lenders, from what I heard, is if you don't have a 650 credit score, a lot of times they don't even look at you. But if you can get it to 780, 800 plus, I know it's hard. That's a high number. However, that is going to give you the best interest rates possible. Step number two is to stop buying expensive things. What do I mean by that? The number one big thing that affects people's credit scores is buying a car. If you're going to buy a car, try to wait until the purchase is done. If you want to buy a piece of real estate, make sure you wait until you want to buy that Lambo after, okay? It's going to affect how you're going to be able to purchase the property. It's going to affect the credit score. The other big thing is don't add more credit. What I mean by that, don't get a credit card. Just don't do it. Just wait until you're done buying real estate until you start opening up those credit card accounts. Big caveat is if you're going to buy those things, if you can pay them in cash, great. If you can't, don't get a loan on them. However, when you're buying a car, you're gonna be forking up a good amount of money that you could have used to purchase the real estate. So just hold off on that and save that money for the next big purchase, which is gonna be your real estate purchase. Just hold off on that. That's actually gonna tie into step number 3. Start saving money. Most of these loans, they require at least 5 to 20% as a down payment. So that's completely relative to the sales price. For most loans, you have to have some kind of down payment amount ready to go. A lot of times there's some loan options that you can get, which is like down payment assistance and things of that nature. But the thing is this, if you're gonna go with some kind of loan that requires down payment assistance, you're gonna be paying that down payment over the long run, because a lot of times you'll see the interest rates get higher and higher when you start to go into down payment assistance. I realize a lot of people, it's hard to be able to save up 5 to 20%, but if you can save 20% of the purchase price, you avoid something called PMI. PMI is private mortgage insurance, and what it means is that when you cannot afford to put 20% down, these mortgages actually charge an insurance because you are a more risky buyer at that point. So if you can, try to save 20%. If you can't, do at least 5%. Before we continue, I want to say full disclosure, I am not a mortgage specialist. Definitely talk to a lender specifically on what the details are for each loan type. There are some loan types, like for example, physician's loans. They're not a very common loan type. However, if you are a physician like a doctor, a dentist, a lot of times they will provide you a certain loan type called a physician's loan. In the theory, and from what I understand from lenders, correct me if I'm wrong in the comments if you are one of these lenders, most of the time, these newly physicianed applicants cannot afford to have a huge amount of down payment. So, and they're also carrying a ton of debts because of medical school and whatnot, with still a very competitive interest rate. So definitely check that out if you can qualify. So step number 4 is showing income on your tax returns, okay? If you run a cash business and you don't show your tax return, you're actually doing a disservice to yourself when you go to buy purchasing real estate, because if you cannot show that, they go based upon your tax returns. You can't just go to these lenders and say, hey, I make X amount of money. There are some that have some stated income loan types, but there's going to be some drawback. I don't know the specifics. Definitely talk to a lender. However, most of the times they go based upon the tax returns. Being able to show that you make a decent income on your tax return is going to be the major basis of how much you're going to be able to afford. And I definitely have to mention this, is that they definitely care about the longevity of how long you've been in that position for. So most loan types, from what I understand, is that you need to have 2 years of experience. Sometimes they require only 1, but if you're going into a new job in a new field, that can actually hurt you. You cannot go into a new job or a new position that's completely unrelated to your previous work experience and expect to go in and get a loan. A lot of times you have to show that you've been in that field or that position for longer than 1 year. All right, now you're ready to look at houses, right? No, don't look at houses yet. You have to go and get those papers that I just told you and give it to a lender. What this lender will do is they'll give you something called pre-approval letter. That will tell everybody, including the listing agent. It'll tell me, your realtor, the guy that you're going to be working with, how much you can afford, and to show that you're actually serious about the buying process. That means that the lender has pre-scanned certain documents to allow for them to be confident in saying you can afford X amount of dollars. Now you have the pre-approval in hand with step number 6. And now it's time to look at houses, right? No, I still actually recommend something else. Do one other thing before you give this to me. Shop some of the lenders. I know that you may have a relationship with some lender, you may have a bank, but the problem is there actually could be some differences. A lot of times loans are very similar, but you want to be able to shop around and see what kind of lenders and what programs you can actually qualify for. But you want to go and talk to multiple people and have multiple quotes. This is actually very smart to do as well, because sometimes in certain situations, these lenders cannot go forward all the way with the loan. You may realize halfway through that one lender can't actually get the job done, but thankfully you got pre-approved with a different lender. With that in mind, then you can continue to pick up where they left off and actually keep the process going in a smoother transaction. Now that brings us to step number 7. Now you have multiple quotes from different lenders and you've given them to me and I analyze. I'll actually help you analyze which pre-approval letter seems to be better, which one has their drawbacks. When I have that in mind, then we can actually say, okay, you can afford X amount of dollars. The worst thing that I would want to happen is if you don't give me that pre-approval letter, we're shooting in the dark of what you can afford. I don't want to show you a $5 million house only for you to have that expectation for every house when you can only afford $500,000. That is one of the reasons why you always want to get pre-approved first, so you can have realistic expectations saying, okay, I can afford $500,000. You can hit the ground running looking at properties that you can actually afford. A common misconception that I want to address is a lot of times buyers are hesitant to talk to realtors because they have an expectation that the buyers are actually going to have to pay the realtor their commission. Actually, most of the time, in most situations, that is not the case. In terms of new builds, in terms of homes on the real estate market that the Realtors Association members can see, almost exclusively the seller pays that commission to us as a buyer's agent. So most of the time, a lot of the fees that you may be paying are not in relation to us, but to the loan specifically. There could be a transaction fee depending on which realtor you're working with, but we're talking about a few $100s. Most of the time, the seller ends up paying us to do our service to help you with the real estate process. Now that you lock down which realtor you're gonna be working with, and hopefully it's me, but the next most important thing is to understand what your goals are. Are you trying to buy a new property? Are you trying to buy a property that's been established? Or are you trying to buy it for an investment purpose later down the road? There's a lot of different options. There's also different property types. There's single family properties, there's condominiums, there's also townhouses, and specifically there's other properties called multi-dwelling or multiple unit properties. What does that mean? In a residential setting, when you get a loan, you can go up to 4 units. You can buy a 4-unit property with the same loan type. And for all my savvy investors out there that are really trying to get the best bang out of their buck, definitely look into fourplexes. And I want to show you a real life example here in Las Vegas right now. So what we have here is actually a listing that is on the market right now in Las Vegas. I blacked out the address and some sensitive information, even though this is called an IDX view. What that means is anybody can actually have access to this information. So the listing agent was kind enough to allow us to know that each unit can be rented out for $750. Each one of them is being rented out for $750. If you do have the opportunity to be able to purchase this kind of a property, you can live in one of the units and rent out the other 3. So if each unit is renting out for $750, that means you'll have a total income of $2,250. Now, based upon my calculation from a title company's mortgage calculator that we use quite a bit, the monthly payment for this mortgage would be $21.89 if you put 5% down. That includes the private mortgage insurance. What does that mean? You're still going to be making money after other people are paying for your mortgage. The other units are going to be paying off your mortgage and then some. Honestly, I could go into many more details and have a whole video about investment types, but I'm going to leave that for a different day. However, it's important to know what your goals are. If your goal is to eventually rent it down the road, definitely think about that now. Don't think about that in a year from now or 2 years from now. Think about it right now, because most of the residential loan types require an owner occupancy of at least 1 year. Some of the loans definitely vary and they have different specifics. However, most loan types from what I've seen is 1 year owner occupancy. That means 1 year of you living in it, and you can continue to rent out that property with the same interest rate for the life of the loan. And step number 8 kind of ties into step number 7 as well, but I want you to actually sit down and write notes of what is most important for you in each property type. If you have certain goals and expectations that you want to meet, write those down. Write the pros and cons of every property that you have. You want to know what is important to you, and the realtor needs to know, hey, I need to know what you're looking for specifically in a property that you want to buy. You hear terms like open concept, you hear terms like I want an open space. However, you also have to consider, is it okay if the house is bigger but the lot size is smaller? Or vice versa, would you rather have a smaller house but a huge lot? These are all contributing factors on what we're going to try to show you. But most importantly, do research on your own as well. I realize you've hired us to be able to help you find properties. However, get a grasp of what you're looking for. Definitely go out and see the neighborhoods that you're going to be potentially buying in. You want to know what is in the neighborhood. How does it feel? I love Costco. If I buy a house, it has to be near a Costco because I just love it. That's one of the preferences that some people like. Some people like to be next to a school. Some people don't. It's all preference. So now we've been showing you properties, we've been driving all around town, and you finally picked out a few properties that you really like. Let's say you narrowed it down to 3. Now it's time to put in some offers. The hardest thing to do about waiting for these offers is to have patience. That's one of the biggest advices that I give all my buyers. It's tough. Sometimes some market conditions require a seller's market. Some of them require a buyer's market. What does that mean? If it's a seller's market, they can hold off and get multiple buyers, so they have to outbid each other. Sometimes it's a buyer's market. That means that you can actually negotiate a lot more of the price to get it down to a really good deal. Now we're at step number 10. Congratulations, we are under contract. What does that mean? The fun part begins. Most of the time, real estate professionals will recommend inspectors. You have to get inspections done. What does that mean? You're looking for structural problems. You're looking at roofing. Roofing is one of the most expensive things to repair. Definitely check the roofing. You have to check the roofing. If there's a leak, you got a big problem. The other thing too is, does your property have a pool? I definitely recommend getting a pool inspection done. These are all things that need to be done usually within the first week or 10 days or 14 days. Definitely check what that timeline is, because that is negotiable. You want to have at least give yourself some time to be able to go to the property, walk through it, look at everything specifically, check the inspection report, and just get that done. Now, once the inspections are done, you got all the reports, you got hundreds and hundreds of pages of inspection information that you need to go through with your realtor. Next step in the negotiating process. There's something called in the Vegas Valley, let's call it the repair request. What that means is you've requested that these certain repairs to be fixed. Most of the times it's another negotiation. They could decide they're going to fix everything. They could decide they're only going to fix certain things. Sometimes they don't want to fix anything and they just end up giving you a cash amount. I've seen it go upwards of a few $100s to a couple thousand to replace some of the things. It just really depends on the situation, but it is a negotiating term. Now, if you're in a situation where they don't want to fix anything and you actually have to go and get your own quotes and everything, definitely get a contractor out, definitely get some workers out there to check how much everything is going to cost. This is something that should be done prior to the repair request, because you want to know how much everything would cost if you have to do it on your own. Because it's a negotiation, and if it's in a market where the sellers have the advantage, they could be like, well, we don't want to fix anything, you got to fix everything yourself. You want to know what that value is to be able to fix everything. And here's a little step 10 point A. You don't see this a lot in probably other cities, but in Vegas, there is a huge presence of HOAs. What does that mean? It's a master planned community, and you see this a lot in some condos and some townhouses where there's a monthly fee that an HOA collects so that they can maintain the property on how it looks. They can have a pool, recreational pool all together. So it's a monthly fee that you have to pay every month. In the state of Nevada, we have 5 days to review those documents. Those documents get received usually by the realtor, and they go over every single page to make sure that you know the rules and regulations that are required in that specific community. Another important part of that is to be able to detect whether or not you can rent the property. So if you're buying this property for the expectation that 1 year down the road you're going to find another house and use that as a rental property, but in the HOA documents they don't allow rentals, well, you just caused yourself a problem, because if you buy the property and you live in it in a year, you can't rent that property out. You either have to stay or you have to sell it. So make sure you definitely check those HOA documents. We're definitely a few weeks in and we're getting ready to get to the closing stage, but before we get to that, it's step number 11. It's called the appraisal. What is an appraiser? An appraiser is a third-party person that goes and checks the value of the property based on their own opinion. What does that mean? They use something called comparables, which is a value that other properties have sold in the area for. So they base it off of previous sale properties that are either alike or similar in square footage, so that they can get a better value and their own opinion on what they value the price at. The idea is that they don't want the borrower to be paying well above market price for a property that they're getting a loan on. They don't want the borrower to be able to default on the property. It ends up being a lose-lose situation if you can't afford your mortgage. I'm going to set an example. If a house that you're in contract is worth $300,000, but the appraiser says it's only worth $280,000, now you have a difference of $20,000. That is, a lot of the times, has to be renegotiated again. That could be split 50-50. The seller can pay that all off or lower the price to $280,000, or the buyer sometimes will pay the difference of the $20,000, but usually that $20,000 would have to be in cash. So you definitely have to tell your realtor and make sure you check how much the house is actually worth, because that could be a problem down the road. Now we are at step number 12. Welcome to the finish line. You are almost there. It's been either 21 to 45 days. Typically, loans can take anywhere from that period of time. However, you're almost there now. What do you have to do now? You're ready to close. That means you're going to be going to the title companies, or in some states, they actually still use attorneys to get the deal done in terms of the paperwork. In the city of Las Vegas, we use title companies. So you actually go there, you sign all the documents. It's going to be a ton of pages that you're going to be autographing, but hey, it's going to be well worth it. And welcome to your new purchase. Now you can finally sit back and enjoy the property that you've been waiting for. It's been 30, it's been 45 days, and now you get to enjoy the property of your own. That's pretty much all the information that I have for today. But if there's anything specifically that you wanted me to go into specifics about, definitely leave a comment below, because I'm trying to give you the most accurate and a great description of how to do real estate related things. I definitely am thinking about doing some investment properties. If that's something that you'd like, definitely comment investments on the bottom in the comment section, because I want to be giving you the best information that I can. If you're interested in seeing more professional videos of our listings at Blackridge Luxury, there's our logo right there. Definitely click right here and we'll get you a link to our Blackridge Luxury channel of all of our listings that are live on the market. Well guys, that's the end of the video. If you really liked the video, make sure to hit the thumbs up. It really shows me that you enjoy my videos and that you want more content to come. It really helps me with the algorithm to get more exposure, and I just want to give you guys the best info that I can. I want to show you guys some of the nice listings that are here in Las Vegas and hopefully around the world. So definitely hit the like, hit the subscribe. It really helps me out. And until next time, with the next video. Take care, guys.